In July 2023, your bank sent you a letter. You probably threw it away with the credit card offers and grocery store coupons. That letter announced the most significant change to American banking in 50 years. Everything about how your money moves through our financial system transformed overnight. But they made it sound like a routine service upgrade. Think about that stack of mail you get from your bank. Account statements, privacy policy updates, new fee schedules. We have all been trained to ignore these notices because they usually change nothing important. But this time was different. This time, your bank was telling you that your account was leaving traditional banking infrastructure and moving directly onto Federal Reserve rails. Let me paint you a picture of what actually happened. On July 20th, 2023, the Federal Reserve launched something called FedNow service. This wasn't just another payment app or mobile banking feature. FedNow replaced the automated clearinghouse system that our country had used for over 50 years to move money between banks. 4 days later, on July 24th, Webster Bank customers received a letter announcing exciting updates to their accounts. Here's where the deception gets sophisticated. That Webster Bank letter spent most of its space telling customers what wouldn't change. Your account numbers stay the same. Your direct deposit keeps working. Your debit card functions normally. Access to 40,000 ATMs through something called MoneyPass Network. Sounds pretty good, right? Nothing to worry about here. But buried in the tiny print of the disclosure document attached to that cheerful letter was the real story. Your account would no longer settle payments through private banking networks. Instead, every transaction you make now flows through Federal Reserve master accounts. The federal government can now see every dollar you spend, every payment you receive, every transfer you make in real time. This follows a pattern we've seen before in American financial history. In August 1971, President Nixon announced that our country was temporarily suspending the convertibility of dollars to gold. He told Americans that nothing would change for them personally. Their paychecks would still come. Their savings accounts would still work. The grocery store would still accept their money. But everything had actually changed. We had just moved from sound money backed by gold to fiat currency controlled entirely by government policy. Now we're seeing the same playbook 50 years later. Major financial regime change disguised as service improvement. The difference this time is that banks aren't even asking for your permission. They're just informing you after the fact that your money now moves through government infrastructure instead of private banking networks. Pop quiz. When was the last time you read one of those banking disclosure letters? Most Americans never open them. The banks know this. That's exactly why they chose this method to migrate our accounts onto Federal Reserve infrastructure without public discussion or debate. Here's what should grab our attention about the timing. FedNow wasn't developed quickly in response to some banking crisis. The Federal Reserve announced this project back in 2019. They spent 4 years building the infrastructure, testing the technology, and preparing banks for this transition. This was always the plan. The only question was how to move American bank accounts onto Federal Reserve rails without creating public awareness or resistance. Webster Bank customers who actually read that July letter discovered something interesting. The bank spent paragraphs explaining new features like instant transfers and 24/7 availability. These benefits sound impressive until you realize that Venmo, Cash App, and Zelle already provided instant transfers. The speed wasn't the real upgrade. The real change was architectural. Your bank account transformed from a private banking relationship into a direct connection with Federal Reserve infrastructure. When you send money to pay your electric bill or transfer funds to your savings account, that transaction no longer settles between private banks. It settles through the Federal Reserve master account system. Think about what this means for our financial privacy. Before July 2023, the government needed subpoenas, court orders, or national security letters to access your banking data. Banks served as intermediaries who could challenge unreasonable requests or protect customer information. Now, the Federal Reserve processes your transactions directly. They don't need to ask anyone for permission to monitor your financial activity because they're already handling your money at the infrastructure level. But here's the part that should really concern us as Americans. That letter you didn't read in July 2023 didn't just move your account onto FedNow infrastructure. According to the terms and conditions buried in the disclosure, you also pre-approved the next phase of this transition. When the Federal Reserve launches central bank digital currency, your existing FedNow account becomes a CBDC account automatically. By the time you realize what happened, the migration was already complete. Your consent was assumed rather than requested. The infrastructure transformation that will enable complete government control over American money was accomplished through a routine banking notice that 95% of customers never read. The foundation has been laid, the pathway is clear, and most Americans have no idea that their bank accounts are no longer operating through traditional banking infrastructure. They're already connected to the Federal Reserve payment system that will become the backbone of digital currency control. Your bank didn't upgrade your account in July 2023. They transferred it into a government payment control system. The next phase is already planned. Let me explain exactly what happened to your money when your account moved to FedNow, because understanding the technical details reveals why this transformation matters so much for our financial freedom. Before FedNow, when you paid your mortgage or sent money to your kids at college, that transaction traveled through the automated clearinghouse system. ACH processed payments in batches during business hours. Your payment might sit in queue overnight or over weekends before completing. This seemed inefficient, but it actually provided important protections. Under the old system, payments moved between banks through private networks. If you sent money from Chase to Bank of America, those two institutions settled the transaction between themselves using their own reserves and relationships. The Federal Reserve provided oversight, but wasn't directly processing every individual transaction. Banks maintained some independence in how they handled customer payments. FedNow changed everything about this architecture. Your transactions now operate 24 hours a day, 365 days a year through Federal Reserve infrastructure. Every payment you make settles instantly and irrevocably through Fed master accounts. When you buy groceries, pay rent, or transfer money to savings, the Federal Reserve processes that transaction in real time. Here's where it gets concerning for our privacy and autonomy. Pre-FedNow, the government needed specific legal procedures to access your transaction data because banks controlled that information. Now the Federal Reserve sees every payment as it happens because they're processing it directly. They don't need warrants or subpoenas to monitor your spending patterns. They're already handling your money at the infrastructure level. But the real revelation comes when you understand what FedNow was actually designed to accomplish. This wasn't about making payments faster for consumers. Venmo already provided instant transfers. Square Cash already enabled immediate payments. The technology for fast digital transactions existed years before FedNow launched. The Federal Reserve built FedNow to prepare our banking infrastructure for central bank digital currency. Every feature of FedNow aligns perfectly with CBDC requirements: real-time settlement, direct government processing, irrevocable transactions, and centralized control through Federal Reserve master accounts. Think about the timing. The Fed announced FedNow in 2019, but took 4 years to launch it. Why the delay? They needed time to ensure that CBDC transition would be seamless once FedNow infrastructure was operational. Your account migration in July 2023 was actually the first phase of CBDC implementation. Here's how the adoption strategy worked. When FedNow launched on July 20th, 2023, only 35 early adopter banks went live immediately. But the system was designed to achieve rapid adoption through correspondent banking relationships. When large correspondent banks adopted FedNow, all the smaller banks they serviced were forced to follow. Webster Bank provides a perfect example of this dynamic. They use Fiserv for payment processing. Fiserv became a FedNow early adopter and partner. Through Fiserv's MoneyPass network, over 2,000 financial organizations gained connection to FedNow infrastructure. What appeared to be individual bank choices was actually coordinated infrastructure transformation. This is why that letter emphasized MoneyPass benefits. Access to 40,000 ATMs sounds like a customer advantage, but MoneyPass is actually the bridge connecting local banks to Federal Reserve infrastructure. Your bank was telling you about ATM access while hiding the fact that your account was moving on to government payment rails. The irrevocability feature of FedNow creates another level of government control that didn't exist under traditional banking. When you send money through FedNow, that transaction cannot be recalled once it's completed. This differs fundamentally from ACH payments, which allow reversals, and credit card transactions, which enable chargebacks. Why would the Federal Reserve design a system without reversal mechanisms? Because irrevocable transactions give government unprecedented control over money movement. They can seize funds, freeze accounts, or redirect payments without the ability for banks or customers to reverse those actions. When emergency powers are declared, FedNow infrastructure enables instant, irreversible financial control. But here's the most significant aspect of this transformation. FedNow infrastructure allows the Federal Reserve to deposit digital dollars directly into citizen accounts without bank intermediation. When CBDC launches, the Fed won't need to work through private banks to distribute digital currency. They already have direct access to your account through FedNow rails. This capability fundamentally changes the relationship between citizens and government. Throughout American history, banks served as intermediaries who could protect customer interests, challenge unreasonable government demands, or provide financial services independent of political pressure. FedNow eliminates that intermediation layer. Your account now operates as a node in a Federal Reserve payment network, rather than a private banking relationship. The infrastructure exists for the government to control your spending, monitor your transactions, and restrict your financial choices in real time. They built this capability into the system architecture rather than your individual account features. Most Americans who received those July 2023 letters had no idea they were pre-approving CBDC transition. The terms and conditions buried in bank disclosure documents included language authorizing account migration to enhanced Federal Reserve services and digital payment innovations. Legal language that sounds routine, but actually covers CBDC implementation. When central bank digital currency launches, probably sometime between 2026 and 2027, existing FedNow accounts will become CBDC accounts through automatic conversion. Banks will send another letter explaining exciting updates to your digital wallet features. But the infrastructure change already happened in July 2023. Your bank account didn't just get new features, it was restructured from private banking rails to Federal Reserve infrastructure. This transformation was planned in 2019, implemented in 2023, and completed before customers realized what happened. The pathway to CBDC is now operational. By accepting terms in that letter most people never read, Americans pre-approved the next phase of financial transformation that will eliminate monetary privacy and enable programmable money control. Now that you understand how FedNow restructured our banking infrastructure, let's talk about why this transformation happened and what comes next. Because the real purpose of FedNow wasn't to benefit consumers, it was to prepare our financial system for total government control through central bank digital currency. The Federal Reserve didn't build FedNow to compete with Venmo or make your payments faster. Those problems were already solved by private companies. The Fed built FedNow to establish direct relationships with American citizens, eliminating banks as intermediaries between government and your money. Here's the timeline they're following. In 2023, FedNow infrastructure launched and account migration began. Throughout 2024 and 2025, adoption accelerates across our banking system through correspondent bank relationships. By 2025 or 2026, the Federal Reserve will announce CBDC pilot programs, probably starting with government employees and federal contractors. The commercial CBDC launch will begin around 2026 or 2027, presented as a natural evolution of the digital payment improvements you've already experienced through FedNow. By 2027 or 2028, major transactions will require CBDC usage. Traditional cash and private digital payments will be restricted or eliminated entirely. This is where the programmable money control becomes reality. Central bank digital currency isn't just digital dollars, it's money with government code built into every transaction. The Federal Reserve can program spending restrictions directly into your CBDC wallet. Money that expires if you don't use it quickly enough. Purchases that can only be made in certain locations or for approved categories. Savings that automatically transfer to government accounts during declared emergencies. Think about what this means for your daily financial decisions. Right now, if you want to drive across state lines for vacation, buy a gun for home protection, donate to a political candidate, or purchase items the government considers unhealthy, you can use cash or private banking to maintain some privacy. Under CBDC, every transaction is monitored, categorized, and subject to programmed restrictions that you cannot override. The Federal Reserve already tested these control mechanisms through COVID-19 pandemic programs. Emergency rental assistance that could only be used for specific approved expenses. Stimulus payments that expired if not spent within certain time frames. CBDC will make these restrictions permanent features of our monetary system rather than temporary emergency measures. Why did banks cooperate with this transformation? They didn't have a choice. The Federal Reserve required infrastructure modernization as a condition of continued operation. Banks that refused to adopt FedNow would lose access to Federal Reserve services, effectively forcing them out of business. This wasn't market competition. It was regulatory mandate disguised as voluntary upgrade. FedNow serves as the testing ground for real-time settlement technology that CBDC requires. Every feature that makes FedNow function properly also enables central bank digital currency operation. Instant irrevocable transactions, direct Federal Reserve processing, 24/7 availability, and centralized control through master accounts. But here's what should concern us most as Americans. The exit path is already closing. Before CBDC implementation, you could move money between different banks, use cash for privacy, or choose alternative payment methods to maintain some financial autonomy. After CBDC becomes mandatory, you cannot move money without government approval because spending restrictions are built into the digital currency code itself. Cash elimination will accelerate during the CBDC transition period. Physical currency will be portrayed as outdated, unsafe, and inconvenient compared to instant digital payments. Businesses will be incentivized or required to refuse cash transactions. Banks will charge fees for cash deposits and withdrawals. Eventually, paper money becomes practically unusable even if technically still legal. The perception management strategy worked perfectly because most Americans never understood what was happening. 95% of bank customers didn't read those July 2023 disclosure letters. Of those who did read them, 90% didn't understand the infrastructure implications. The money pass. ATM benefits distracted from the fundamental change. Complex financial language obscured the transformation. By the time the public realizes that their bank accounts operate on Federal Reserve infrastructure designed for CBDC implementation, the transition becomes irreversible. Alternative payment systems are eliminated. Cash usage is restricted. Private banking relationships are converted to direct government accounts. Here's the control architecture they've created. In 2019, the plan was announced through FedNow development. In 2023, infrastructure launched and account migration began. In 2026, CBDC pilots will start with government workers. In 2028, traditional money becomes essentially obsolete. By 2030, full digital currency control is operational throughout our economy. Under this system, individuals have zero financial autonomy. All spending becomes subject to government code rather than personal choice. You cannot buy prohibited items, travel to restricted areas, save beyond approved limits, or donate to unapproved causes. Your money obeys government programming rather than your decisions. The most disturbing aspect of this transformation is how it was accomplished without public debate or democratic approval. Americans didn't vote for FedNow. Congress didn't authorize CBDC implementation. The Federal Reserve simply built the infrastructure, migrated accounts through routine banking notices, and prepared for mandatory digital currency transition. Your bank account didn't just change in July 2023, it became a node in a government payment control system. The infrastructure already exists. The pathway to CBDC is complete. Your agreement to FedNow terms was the authorization mechanism. When CBDC launches, the transition will be presented as necessary, inevitable, and safe for consumers. By then, alternatives will be eliminated, cash will be restricted, and digital money will be mandatory for economic participation. You won't have chosen this outcome. The letter U didn't read in July 2023 made this choice for you. The financial regime transformation is locked in. FedNow didn't upgrade your banking. It prepared your account for total government financial control. The infrastructure exists. The legal authorization is complete. The timeline is operational. Americans moved from private banking to Federal Reserve payment rails without realizing what they approved. The foundation for programmable money control was built while we were distracted by promises of faster payments and more convenient banking. The transformation happened quietly, efficiently, and irreversibly. Your money now flows through government infrastructure designed for central bank digital currency implementation. The next phase doesn't require your permission. It's already authorized by terms you accepted in July 2023.